Most traders look at candlesticks and only see highs, lows, opens, and closes. But what if I told you that every candle holds something deeper? Each one reveals a story, a rhythm, not just of price, but of behavior, of attention, and of energy. What you've been taught to ignore is exactly what you need to understand. I'm going to show you how to see the market differently, not through indicators, not through guesswork, but through a lens that brings clarity to chaos. This is CRT, Candle Range Theory. It's not just a concept, it's a way of seeing. And once you start to see through CRT, you will never see the market the same way again. Now, this is where the real journey begins. So let's get straight into it. What is candle range theory? Candle range theory is a simple but powerful way to read the market through its natural phases. So I'm going to type the meanings on the chart and just follow along. Now, CRT is based on how price actually behaves because it's based on how people behave. Because, in my opinion, the market is a reflection of human behavior. I'm not even going to go too deep off of that. That's probably for another video at another time. But every single market move is made up of three phases. Now, let me write the definitions so we can just have something to follow along here. Now, every single market move is made up of three phases, okay? Accumulation, manipulation, and expansion or distribution, depending on the direction of the market. Now, this is where the real move happens. Now, I'm going to write these definitions as well and follow along. Okay. And these phases now, what they do is they repeat over and over because, like I said, human behavior repeats. And that is the root of CRT because it keeps you grounded in the truth at all times. Now, I'm going to write this down so you can have something to look at and write along with if you want to. Now, once you really begin to understand exactly what I am saying, even if you have to rewatch it, reread it, and understand that human behavior repeats, so that means that CRT will repeat itself over and over, you'll have a very good and strong foundation to what candle range theory really encompasses and embodies to the market. Now, next is candle interpretation. Okay. You have to understand the market's language. So let me change this chart and update y'all from here. Now, to truly understand CRT, you got to start with the basics, right? And this is candlesticks. Now, candlesticks don't just show numbers, they tell a story within the story that's unfolding right in front of you. And for example, okay, let's say there are three types of candles, right? You have a long body candle that shows strong conviction of buyers or sellers, depending on whether you're bearish or bullish and who are clearly in control. So a long body candle will obviously represent something like this, right? I'm going to draw on a chart. Bear with me. I'm not a, you know, not an artist, but you get the point. All right. And what I'm going to do, let me do this. Fill this in, give it some color so you can really, so it really help bring it alive, you know? So for this example, this is a bullish candle. So you can see that the candle had a longer body because of where it is in proportion to the open, the low, the high, and the close. So the open would represent in this case this level here, the very first green that you see beginning to form that candle. that candle is now above the open. So that means that it started here, but began forming at a higher price point. So let me make this a little more clear and understandable now. Okay. Here is the candle open. Now I'm going to draw out the low. Okay. Now remember, this candle is a long body candle. So the low isn't far in this exact example. The candle open and the low are generally, you know, almost right next to each other, so to say, right? So here you have the candle low. Candle low. Okay. And as you can already tell at this point, we will have the candle high, which is, since this is a bullish candle, the high is very important. So, and we have our close. Now, in most cases, when a candle closes, it generally does not hold necessarily too much weight, but it still serves the purpose in confirming the type of candle that you have. For example, without the close, this whole bullish candle could turn into a bearish candle because it never closed yet. It never became cemented in stone in the market. Now, let me just write out the close just so we got the representation of all four of them, right? Candle close. Put this bottom in here. So this is generally what the candle would look like when you have a long body, okay? And a long body candle represents a stronger sense of conviction. So now with a long body candle, what you're able to tell very easily is whether buyers or sellers are clearly in control. It's very easily because of how the candle formed. Now, there would be other scenarios, okay, where you would have a small body candle. And in this scenario, it will show indecision or like a balance between both sides as the market decides and prepares for its next direction. So, what a small body candle would look like would be something like this. Okay. Okay. And now, what this type of formation is, it's sort of a candle that is filled with indecision. So, in this case, it could either be bullish or bearish, but just for the flow of the way that I have things now, I'm going to make it bearish. So, I'm going to draw, a green inner base. That was terrible. So, I'm not going to do that. Can't have it going outside the candle, you know what I mean? But I did on the other one anyway. But it doesn't got to be perfect. I just want the visuals to be understandable because for me, I'm a very visual learner, and it might be many other people who are visual as well. So with this here, now let me begin to draw the open, the low, the high, and the close, because every candle has these four things. Okay. Okay, so now we have all four major identification points of a candle. And let me draw out the small body so that everyone could completely know which type of candle I'm talking about here. There we go. So this is a small body candle. So now this still shows indecision. So this can be, in most cases, it could be sort of bullish or bearish. But once again, this gives you a range of what the market is doing, and you can see that some type of shift could be potentially happening because something is changing in the formation and the momentum of the candle. Now, another candle example that we will have is long wicks. Okay. Long wicks shows price rejecting and its volatility that is actually rejecting from. And this is where normally you begin to see where the traps are happening in the market, because a long wick shows it was a sharp, volatile moment that went and collected some liquidity. And now the market is getting ready to go in the opposite direction, or is getting ready to kick off now with more speed. So I'm going to draw out the long candle example and show you what that is. Now, once again, even with this long wick candle, we still see that we have our open, our low, which means price came low, but then it sort of sporadically reversed, as you can see, in the opposite direction, continue going higher, 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 high, a little bit lower, and then you have the close. But the way that I just described that is the key of identifying the energy behind this candle. Because once you understand what causes it, you could pretty much already see what didn't happen on the lower time frames without actually needing to even go there. Because you understand our very next point, which is that the markets are fractal. But before that, let me draw out these opens, highs, lows, and closes and show you how the range will look. Okay. Now you can see the range that you have when you have these type of candles is that the low is generally farther than the open, close, and the high. Generally farther than all three combined when it comes to the range, which shows you that okay, some type of sweep was done and you're preparing yourself to go the opposing direction with momentum. Now, but I forgot to draw out the candle, so let me just do that. Let me follow this. Here you go. This is a very clean visual of the way to interpret the generally the most frequent types of candles there are. You don't really get any other candle formations outside of these. You might get something in between, but they will generally represent the strength of a long body candle, a small body candle, or a long wick candle. So now the next point that I was going to get into. Okay. The next point that I was going to get into is candles as ranges, and this is how you see the fractal within. So now, as you can see by this quick diagram that I have created here, right, you can now see that CRT adds another layer. You can see exactly where the layer is coming from because now you have a framework to base your internal structure off of because you understand the fractal nature of the market. But now, even with a single candle on the 1 hour time frame, you might still be able to see a full CRT cycle, even on the 1 minute chart, because it's all happening at the same time, just on different scales. And now, to continue even deeper, right? The real strength in this comes when you realize that one, candles are not isolated, okay? They're micro expressions of deeper structure. So let me sort of see if I can draw that clearly. I kind of want to just keep these in a frame as I go so you can just understand. But if not, then it just wasn't meant to be. But now, like I was saying, this means that they're micro expressions of a deeper structure. So let me write that out. I'm gonna write all of these key points that I'm going to speak on out and just follow along as I go and say them in real time. Another key point that I'm just going to write and say is because it's still important. Now, CRT teaches you how to read the market within context. So what it is so you're not lost in the noise. A lot of people are lost in the noise or they are simply causing noise to themselves. So CRT teaches you how to read the market within context. Okay. What's going to make this even clearer and understandable is this. This is shows you how simple CRT really is. In the uptrend, CRT, candle range theory, meaning it means that you are always going to be targeting highs. Okay. In the uptrend, you're always going to be targeting highs. So I'm going to write that down as well. And now, as I'm sure you can already tell, in a downtrend in CRT, you are always going to be targeting lows. Okay. The reason that you would be targeting highs at all times in the uptrend and lows at all times in the downtrend is because of this. This simple fact that many people seem to skip over is that price flows toward liquidity. And CRT helps you see how that flow builds before it gets released. So you're essentially seeing the next move of the market before it happens, or you're targeting the next high or low of the market in anticipation of that's where the momentum is within the range. So let me even write that down so you can sort of get the framework. Okay. So this is simply just because price flows toward liquidity. Now, to build up off of this, okay, now what you're going to have to do to understand it even deeper, okay, is you're going to begin to think beyond the candle because context is everything. Okay. What I simply mean is you're going to have to think of things like this. Okay. Well, let me just to show you, just to show the simple framework, I'm going to draw out another version so we can have the title. I feel like once you have the overall title of what it is you're learning, you can understand the definition that exists within very much easier. Okay. Now, well, let me change the name and stuff like that before I continue. Like I said, think beyond the candle. Okay. Context is everything. Now, this is the part that a lot of people may misunderstand when it comes to CRT or even understanding its core, because this is where most traders stop. Okay. This is where they focus on the candle itself without asking why it formed and where it formed. Okay. So, the type of questions that you're going to need to ask yourself are questions like these. Okay. Questions like, what session is the candle forming in? Okay. Is it in New York? Is it in London? Or is it an off hour range where you know that the market is not volatile? For example, just to give you an example real quick, let's say you're trading EUR USD. Okay. And you see a position forming in either London session or US session, you know that those two areas are generally where the most volatility is going to be. That is generally where the market is going to get ready to be more volatile and push towards whatever, like that candle is going to have more meaning. Okay. Now let me write that down as well, so you can know like the sort of process that you have to be able to understand, because these are questions that you have to ask yourself. What session is the candle forming in? Is it London, New York, or an off-hour range? Or even if you're trading something like, just because I don't have the example here, but I'm going to say the example. So let's say you're trading something like USD JPY, for instance, right? We know that since it has USD and JPY, Asian session counts as a volatile session for that pair. A lot of people only think about London and New York, but if that name is in the pair, then that is where you will have lots of volume and you will have the moves of the day potentially forming in. So just to cover that up, there you go. Next, right? Another type of question that you're going to have to ask yourself is this: what is the structure around it? Is price building, rejecting, or breaking through like a important structure point or area of liquidity? In my case, I prefer area of liquidity. Let me write these down and so you can follow along as well. It's a bit of a longer question, but it still is very important because it gets the point across. It helps you understand the context of the candle. Next is, what liquidity is this candle grabbing or pointing toward? This is probably the most important thing that will help you gauge the correct direction of the market and of the candle. Okay. You want to ask, what liquidity is this candle grabbing? Or if it's like not yet grabbing it, which one is it pointing toward? Okay. Is it pointing bullish or bearish? This is important. Now, let me write this down. Just to say, side note, I did not mean to put it in caps. It was in caps lock by itself. So maybe that's a sign. Maybe you guys should understand that this is the very most important question that you can ask yourself when it comes to understanding the context. What liquidity is the candle grabbing or pointing toward? Okay. With this understanding is you should be able to understand that a single candle does not tell the full story without the context. And CRT helps you step back and connect that candle to the bigger phase that it's actually a part of. And so, just to sort of show you guys what I mean, right? Let me frame back to this here. Okay. You can see the ranges that's created. We understand that there is a lower time frame structure that's creating all of this. Okay. For example, you will have a lower time frame, expands, it closes, but we see that there's high uptrend momentum. Here, you pretty much see a imbalance of momentum, sort of like the market is still figuring itself out. It's still balancing to prepare to go rather bullish or bearish. But in this case, since it closed bullish, it's preparing to go bullish because you will have a low, a higher high, higher low, higher high, higher low. You have sort of more equal highs and lows, but it's still overall pointing what? Upwards. It's pointing and what? Like we just said, okay? What liquidity is the candle grabbing? Even in this case, the candle will now be targeting those high candles. Now, same thing for the low wick candle, because what this candle will represent is it represents an uptrend going on this candle, but it was a fake out of a downtrend move first that swept the lows before ultimately continuing back highs with higher momentum and showing that it's ready to continue higher from that point. So this is generally the fake out candle, the long wick candle. Okay. Now that was just so you can sort of understand the internal nature of the markets without going into too much detail. One more important point that I feel like I need to cover here, okay, is that, or I need to go more depth into, is the fractal nature of the markets, because this deserves its own subcategory. Okay. This is another very important thing. You want to be able to see candle range theory playing out on every level so that you understand the context of the market. And so you're not ever at a point wondering what is happening. You're already catching flow to what's already happening by understanding the full context and fractal nature of the market. So just to go more in depth into this just means that key behaviors, okay, so structure, liquidity, accumulation, manipulation, distribution, expansion, they all repeat just on different time frames. Now, let me spell out that definition as well, okay? Understanding this is very important. So, understanding the same key behaviors, structure, liquidity, accumulation, manipulation, distribution, or expansion, they all repeat on different time frames. So, just to sort of give you a visual picture, the same pattern that you see play out on a 5 minute chart, you can also see playing out on a 4 hour chart or a daily chart or a weekly chart or a 2 hour chart. Okay. Even charts that you generally wouldn't think, but it's all charts. The market in itself, you will generally see the same type of patterns playing out. The reason that price action is so similar is because the people trading them are the same. So this is what helps answer that question that you might be having of why. Okay. Because the people playing and interacting with the market are the same on all time frames. So retail traders, institutional traders, liquidity people, they all trade the same way, but on each time frame that they like, or each time frame that they see it appearing on. So you will see the same patterns happening over and over across all time frames. I hope I explained that very clearly, because this is also one of the very important things that you will need to understand when it comes to timing your trades. And that's for another conversation. But let me write this down so you can understand. Okay. What CRT ultimately teaches you is to read behavior, not just the time, not just solely the price. So no matter what chart that you're on, you've seen sort of the same story unfold across each and every one of them, or each and every one of them that matters. Okay. Let me just write that out as well, because just a shortened version that CRT teaches you to read behavior, not just the time. Okay. Now, once you understand this, you also understand another core pillar that will allow you to be able to see and understand CRT the proper way that you are supposed to see the market in itself. So, video is getting pretty long. I think that was all the core foundational things of the market. But now that you understand how CRT views candles, context, and structure, like we go over candle, context, and its structure, we're going to go deeper. So in the next video, I'll break down more phases and show you how to spot them on a chart so that you can really see. Now, this is where everything finally begins to click. Before I end off this video, I want to make it very important to you that whether you are a beginner or an experienced trader, CRT will forever shift how you see the charts. This is the official foundation, the starting point of CRT. Make sure to subscribe and turn on those notifications to keep learning how to master this beautiful skill of trading and connect deeper within the market. See y'all in the next video. Peace.